President Trump has issued a strong warning to the BRICS nations, urging them to make clear commitments to prevent the rise of any currency that could rival the US dollar. He reaffirmed his dedication to maintaining the dollar as the world's primary reserve currency, and emphasized that severe economic sanctions, including 100% tariffs, would be imposed on any nation attempting to challenge its dominance. In a pointed statement late last year, President Trump declared that there is no chance the BRICS bloc would replace the US dollar in international trade or elsewhere. He added that any country attempting to do so should say hello to tariffs and goodbye to America. Earlier this year, he reiterated his position on social media, stressing that any efforts by BRICS nations to undermine the dollar would not be tolerated. He insisted on a clear commitment from these nations not to create or endorse any rival currency, warning that those who defy this stance would face 100% tariffs and be totally cut off from the vast U.S. market. Despite this warning, Brazil, as the current BRICS president, is advancing reforms aimed at reducing reliance on the U.S. dollar. These reforms focus on easing cross-border payments in local currencies, with the goal of fostering financial autonomy and reducing transaction costs in global trade. Brazil's strategy includes leveraging technologies like blockchain and enhancing payment system linkages to streamline international payments. A significant part of Brazil's plan is inspired by its own success with the Pix instant payment system, which has rapidly overtaken traditional payment methods like cash, credit, and debit cards since its launch in late 2020. Additionally, Brazil has already implemented a local currency payment system, SML, for trade agreements with Argentina, Uruguay, and Paraguay. This allows for direct settlements in Brazilian reais, bypassing the US dollar, though the system currently requires several business days to process. There is optimism that integrating instant payment technologies could make these transactions faster, more secure, and cost-effective. Later this month, BRICS representatives are set to meet in South Africa on the sidelines of the G20 meetings, where Brazil will present its plan for the July BRICS summit. The group has recently expanded, with countries like Egypt, Ethiopia, Indonesia, Iran, Saudi Arabia, and the UAE joining the bloc. The move toward enhancing local currency payments is part of a broader strategy to increase the financial autonomy and resilience of emerging economies. The US dollar's path to becoming the global reserve currency began after World War II, when Allied nations convened in Bretton Woods in 1944 to create a new international monetary system. The US dollar was chosen as the central currency, with other currencies pegged to it and the dollar convertible into gold at a fixed rate. This system provided a stable foundation for global trade and cemented the US's economic and political dominance. Over time, the dollar became integral to international trade, supported by the strength of the American economy, which bolstered confidence in the currency. The Bretton Woods system lasted until 1971, when President Nixon suspended the dollar's convertibility into gold, marking the end of the Bretton Woods era and the start of floating exchange rates. Despite the shift, the dollar remained the dominant global currency, further solidified by the petrodollar system in the 1970s, which established oil sales as exclusively dollar-denominated. Today, the dollar's position is reinforced by deep financial markets, political stability, and international institutions. President Trump's recent remarks reflect the growing concern over challenges to the dollar's supremacy, particularly as BRICS nations explore alternative currencies and payment systems. If these efforts to reduce reliance on the dollar succeed, the consequences could include diminished demand for U.S. treasuries, higher borrowing costs, and a weakened geopolitical influence for the U.S. In this video, we'll explore Trump's warning to the BRICS nations and evaluate the progress made by these countries in reducing their dependence on the U.S. dollar. Let's begin by examining the ongoing trend of dollarization within the BRICS bloc, as members gradually increase the use of their local currencies in trade to enhance financial independence. In early 2023, China and Brazil, the two largest BRICS economies, reached an agreement to conduct trade in their own currencies, the Chinese yuan, CNY, and the Brazilian real, BRL. This move eliminates the need for the US dollar as an intermediary, streamlining trade and reducing exchange rate fluctuations. In 2022, China-Brazil trade reached approximately $150 billion, with China being Brazil's primary trading partner. Using local currencies will simplify transactions, cut conversion costs, and foster greater financial autonomy. Iran and Russia have also made significant strides in integrating their financial systems to enhance bilateral trade and avoid Western sanctions. This cooperation includes connecting their national payment networks and mutually accepting each other's bank cards, further strengthening their economic ties. These initiatives represent a growing push within the BRICS bloc to challenge the dollar's dominance in global trade. and the consequences of such moves could be profound for international finance and U.S. economic influence. In early 2023, Iran and Russia integrated their banking systems, granting Iranian banks access to Russian financial institutions, as well as over 100 banks across 13 other countries via Russia's SPFS system for transfer of financial messages, an alternative to SWIFT. This integration allows for the issuance of letters of credit, transfers, and guarantees without relying on SWIFT, thereby mitigating the impact of Western sanctions. On July 6, 2024, Iran's central bank announced the integration of its Shatab interbank network with Russia's Mir payment system. This move enabled the use of Mir cards in Iran, simplifying transactions for Russian tourists and businesses within the country. This effort aims to reduce reliance on Western financial networks and bolster bilateral trade. By November 2024, Iran and Russia further deepened their financial integration by allowing Iranian bank cards to be used in Russia. This facilitated easier payment processing and cash withdrawals for Iranian citizens abroad, while strengthening commercial ties between the two economies. India and Russia, similarly, began using local currencies for trade, especially in the energy sector, following the imposition of Western sanctions on Russia in 2022. In 2023, Russia became India's primary supplier of crude oil, with a significant portion of the transactions conducted in Indian rupees, INR. This arrangement allowed both nations to bypass dollar-based payment systems, shielding them from external economic pressures. South Africa, a member of the BRICS group, has also increasingly preferred settling transactions in its own currency, the rand, ZAR. China remains South Africa's largest trade partner, with bilateral trade exceeding $50 billion in 2023. South Africa has signed agreements to settle certain imports, including machinery and electronics, in yuan, CNY, reducing its reliance on the dollar and boosting liquidity in African markets. Quick break. If you're enjoying the video so far, could we ask a small favor? Hitting the like button helps us reach a broader audience, and sharing your thoughts in the comments makes a huge impact. Thank you for watching. Let's dive back in. BRICS Pay, a decentralized payment platform created by the BRICS nations, Brazil, Russia, India, China, and South Africa, enables smooth cross-border transactions in local currencies. The initiative aims to reduce reliance on Western-dominated financial networks like SWIFT, thereby strengthening the economic sovereignty of its member states. Launched in 2018 by the BRICS Business Council, BRICS Pay utilizes existing national payment infrastructures, including Russia's Mir network and India's Unified Payments Interface, UPI, to facilitate efficient international payments. The system allows users to send and receive payments in their local currencies, simplifying currency conversions and lowering transaction costs. Built on blockchain technology, BRICS Pay ensures secure, transparent, and efficient financial transactions across member nations. Its architecture combines centralized systems for domestic operations with a decentralized structure for international transactions, allowing for regulatory compliance and technological flexibility. National payment systems such as Russia's Mir, India's UPI, and China's UnionPay are integrated seamlessly for secure local transactions. On the international front, blockchain's decentralized network enables direct peer-to-peer transactions, eliminating intermediaries and enabling real-time, efficient settlements. The distributed ledger technology ensures immutable transaction records and supports smart contracts for automatic currency conversions and compliance procedures. The scalable design of BRICS Pay enables quick deployment, adapting to various technical and regulatory environments in member countries. The system can handle increasing transaction volumes and incorporate new participants without sacrificing efficiency. Interoperability is a key feature, ensuring smooth cross-border transactions between different national payment systems. The distributed network optimizes liquidity flows by enabling real-time settlements in local currencies. These features enhance the system's efficiency, positioning it as a credible alternative to conventional financial platforms. By promoting the use of local currencies in international trade, BRICS Pay aims to reduce the US dollar's dominance in global transactions and promote a multipolar financial order. The platform offers BRICS nations greater control over their financial affairs, mitigating the impact of external economic pressures and sanctions. By integrating national payment systems, BRICS Pay accelerates cross-border transactions, reduces costs, and improves overall efficiency in financial exchanges among member states. In October 2024, during the 16th BRICS Summit in Kazan, Russia, BRICS Pay was officially launched as a blockchain-based cross-border payment system. Attendees saw live demonstrations showcasing the platform's capabilities, underlining its potential as an alternative to traditional financial networks. BRICS nations share a common goal: to strengthen their financial stability, and reduce the risks tied to currency volatility and geopolitical uncertainties. To achieve this, BRICS has embarked on a comprehensive accumulation of gold reserves. By the close of Q2 2024, BRICS countries had amassed approximately 6,200 tons of gold, representing 21.4% of global reserves. Russia leads the effort with 2,340 tons, 8.1% of global holdings, closely followed by China with 2,060 tons, 7.8%. Notably, Brazil has nearly tripled its gold reserves from 2018 to 2024, signaling a robust strategy to bolster its economic defenses. This gold accumulation reflects BRICS's broader goal to reduce dependence on the US dollar and enhance financial sovereignty. By diversifying their monetary assets, BRICS nations shield themselves from sanctions and strengthen their independence in monetary policymaking. Gold serves as a hedge against external financial risks, ensuring that BRICS economies are better prepared to weather global economic fluctuations and crises. These measures are not only about safeguarding their economies but also about signaling a shift toward a multi-centric global monetary order. The integration of gold reserves and initiatives like BRICS Pay demonstrate the bloc's commitment to building a strong, self-reliant financial ecosystem. Together, these efforts aim to create a resilient framework that can withstand market instability, while reducing dependency on traditional financial channels like the US dollar and Western-controlled institutions. By synchronizing efforts in gold accumulation and decentralized payment systems, BRICS nations are paving the way for a financial order that prioritizes stability, independence, and fair economic participation in the global arena. The drive toward dollarization. Dollarization, where nations actively move away from the US dollar in global trade and finance, is driven by several critical factors. Chief among these is the desire to regain economic sovereignty and stability. The dominance of the US dollar gives the United States significant influence over the global economy, and its monetary policies can create volatility in other countries. By distancing themselves from the dollar, nations aim to regain policy autonomy and reduce their vulnerability to external shocks. Reliance on the dollar also exposes nations to US sanctions, which can limit access to international financial systems. Countries like Russia and China are exploring alternative options to maintain their economic independence and avoid these restrictions. Reserve diversification is another major factor. Historically, central banks around the world have held large portions of their reserves in US dollars. But there is now a growing trend toward diversifying into other currencies and even gold. This strategy helps distribute risk and weaken the dollar's dominance. Political and strategic considerations also play a role. Countries like China and Russia are working to counterbalance US influence by promoting the use of their own currencies in international transactions, contributing to the broader vision of a multipolar global financial order. Additionally, regional economic agreements are increasingly being used to conduct transactions in local currencies, further reducing the dollar's role. For instance, the agreement between China and Brazil to use their respective national currencies streamlines trade by lowering conversion costs and barriers. Finally, dollarization reflects shifting global economic dynamics. As emerging markets grow in strength and importance, they naturally gravitate toward using their own currencies to reflect their increasing influence and solidify their financial networks. Trump's warning to BRICS nations. Trump has warned BRICS nations about challenging the US dollar's dominance, threatening severe tariffs. In a post on his Truth Social account, Trump declared that any attempt by BRICS nations to weaken the dollar is unacceptable. He demanded an unequivocal promise from these nations not to support or establish any rival currency that competes with the US dollar. If they fail to comply, they would face 100% tariffs and be completely excluded from the US market. Throughout his campaign, Trump has repeatedly vowed to make it financially unfeasible for any nation to abandon the dollar. His latest comments heighten tensions leading up to his January inauguration. Trump's warnings are consistent with his previous use of tariffs to further his economic objectives. Reports suggest that Trump's inner circle is evaluating strategies to penalize nations engaging in bilateral trade outside of the dollar. Proposals include restricting exports, designating such countries as currency manipulators, and imposing additional trade tariffs. These measures reflect Trump's commitment to maintaining the supremacy of the dollar. The discussion on dollarization gained momentum after the 2023 BRICS summit, during which the group deliberated on reducing reliance on the dollar. The idea of alternative currencies gathered steam in 2022. Especially after US-led sanctions against Russia sparked global dissatisfaction with the dollar's monopoly. Trump's campaign underscores the importance of confronting these trends and signals a firm stance against any economic coalition, aiming to diminish the dollar's global influence. Trump has already unsettled international financial markets with his announcements of broader tariffs on key trading partners. For example, He proposed a 10% tariff on Chinese imports and a 25% duty on goods from Mexico and Canada unless those governments implemented stricter measures against drug trafficking and illegal immigration. Recently, Canadian Prime Minister Justin Trudeau met with Trump to discuss trade and border issues, suggesting potential efforts at reconciliation. However, Trump's stance signals his readiness to use economic tools to pursue both domestic and international agendas. Trump has asserted that no nation can replace the dollar in global trade, warning that any country attempting to do so will be completely cut off from the U.S. economy. As Trump prepares to take office, his assertive economic policies are expected to be a central feature of his second term, with significant implications for global commerce and diplomatic relations. The global shift in BRICS' challenge to the dollar. The decision by BRICS nations to develop a new payment system and potentially introduce an alternative currency has sent ripples through the Western financial system. These initiatives represent a coordinated effort to challenge the US dollar's status as the world's leading reserve currency. By establishing alternative financial infrastructure and reducing reliance on dollar-based trade and reserves, BRICS is reshaping the global economic landscape toward a more multipolar order. This strategic shift has caused significant concern in the United States, as the dollar's reserve currency status has long provided the U.S. economy with considerable advantages, such as lower borrowing costs and substantial leverage in international markets. Under the Trump administration, these developments have sparked fears about the potential erosion of America's economic influence. Trump has openly expressed concern that BRICS' coordinated efforts could undermine the foundation of U.S. financial dominance, potentially jeopardizing the dollar's privileged status. In retaliation, he has ramped up rhetoric aimed at BRICS nations, warning them about the risks of aligning with the bloc. His administration has underscored the potential consequences of challenging dollar hegemony, including strained economic ties with the U.S. However, for many countries, the promise of a fairer, more independent financial system outweighs these warnings, marking a pivotal moment in the reconfiguration of global economic power. The BRICS initiative represents not only a challenge to the dollar, but also a broader declaration of sovereignty and a call for more equitable economic participation in the 21st century. Thank you for watching this video. We truly appreciate your support. If you found our content valuable or inspiring, please consider liking the video and subscribing to stay connected with our community. Your support means the world to us. You can also watch another video from our channel now on the screen.